Okay, everybody, it's me, Gregory Mannarino. Let's do this. We have a lot to talk about this morning, a slew of economic information, not one, but two stark warnings from Wall Street mega banks here, and a bunch of other stuff. So yes, pre-market report on this lovely Wednesday, September 7th, 2022. Let's start off with, with some economic news here. We're finding out. You might want to sit down for this one. You may not believe what I'm about to tell you. I know it's going to be really crazy, so I'm going to prepare you, all right? Inflation, I'm laughing. I shouldn't be laughing at this. Inflation continues to rise. Oh, were we just peaking? Oh, I thought that's what they said a couple of weeks ago. Yes, they did say that. Every time you hear one of these talking heads on any of the mainstream propaganda ministries tell you that inflation is peaking, call up the network and just laugh into the phone. Just laugh. We're not done in any way, shape, or form here peaking. Inflation globally is ballooning with no end in sight. You can't just stop this, okay? The action of central banks right now in no way, shape, or form is doing a thing, nothing, to stop surging inflation. As a matter of fact, that's the goal. You know this if you've been following this blog. The goal of central banks is to inflate and create inflation. Pull cash out of the future into the now using any mechanism possible. Puppetize government officials, presidents, whoever it might be that they have to, use to achieve their end game, their end goal here, to be the lenders and buyer of last resort. Forget about it. Okay, with inflation, we haven't seen anything yet. So imagine Greg Mannarino's shock here. Here's another piece of economic info you're going to love. Mortgage demand continues to fall. Now, I don't think that's any surprise to a single person as well. I've been explaining that. It's not going to stop either here, okay? None of it is by accident. That's the truth. That's number one. Number two here, with regard to the economy, what have I been telling you for I don't know how long? It's just not going to stop. Now, here we go. Here's another thing you need to know about. And this is not a surprise because we've already spoken about it, but more major corporations are coming forward saying not only are they going to be laying people off, but they're cutting back on business investment. In other words, they're not looking to grow their businesses. It's amazing. If you look at everything that's going on right now and you listen to the narrative from puppet presidents and, imbeciles here that they float out here on the mainstream propaganda ministry, we're booming, we're doing great. But why is all this going on here? You see, it's a very interesting set of dynamics in play here. All right, now, I want to talk about two warnings that we got here. One is from Morgan Stanley. Now, pay attention to what they're saying. Morgan Stanley is warning of a stock market free fall. Now, they're pointing at the debt market. They're specifically saying there's trouble in the credit market. Okay, I don't think that's again a surprise to you because this guy here has been explaining to you that as of late, the debt market is unstable. It's absolutely unstable. Now, okay, so if you don't want to listen to Greg Mannarino, and I know you do, you'd rather hear me than listen to Morgan Stanley, at least I would hope so here, but they're backing me up here. Morgan Stanley warning of a stock market free fall, pointing at trouble in the credit market. I mean, duh. Okay, let us move forward here. So Goldman Sachs is warning of a severe slowdown in the housing market, a severe slowdown in the housing market. So let me ask you, this video has been going on for about 4 minutes and 20 seconds as I am talking here. Does any of this surprise you? Has one of you been shocked? Oh, I'm so shocked. I can't believe it. No, I don't think any of you are surprised or shocked at all. It's just what you would expect in this environment. But if you think this is it, well, then you have no idea of what's actually coming. This is just a setup for the grand freaking finale. The grand freaking finale, again, look, don't listen to Greg Mannarino. Listen to Morgan Stanley talking about trouble in the credit markets. People, look, we have a global sell-off in debt. Think of what I'm talking about here. Debt is selling off. The system demands that more debt be put into it in order to function. Period. It's a Ponzi. You know that. If debt is selling off here, we're running into a liquidity problem. Okay, liquidity, cash, there's not enough of it. Look, here's another big secret for you. If you follow this blog, you already know this, but I'm going to tell you. Even though global debt is in the biggest bubble that has ever been seen, created, thought about, imagined, or fantasized about, in the history of the world, there's not enough debt. Yeah, let that sink in a little bit. The system must be fueled constantly, every moment of every day, 365 days a year, including leap year, whatever. More debt must be added to the system. And now we have a global situation where debt is selling off. This is not a good thing. And it plays right into what I've been explaining. Literally, people, listen to this word, time immemorial. Since time immemorial, this guy has been explaining to you that we're going to get a meltdown in the debt market. Okay, the debt market meltdown is about a sell-off, a major sell-off. We're seeing a small bleed here in the debt market. Okay, but it's going to bleed off much faster at one point when that bubble bursts. So in my view, we're definitely seeing cracks here. Instability in the debt market, cracks in the debt market hyper bubble. And again, going back, don't listen to me. Listen to Morgan Stanley. Listen to Goldman Sachs too, because understand what they're talking about here. This is their words, not Greg Mannarino. A severe downturn in the housing market. It's all part of the bubble. It's all part of the bubble. Mortgage demand falling off of a cliff. Inflation continuing to rise. Imagine my shock. Imagine your shock. Can I see your shocked face? Let's do this together. Ready? Shocked. I mean, really, make any of this stuff up. It's impossible to do. All right, let's go look over here at the stock market. People, again, what did Greg Mannarino do this morning? What's the first thing I did? Did I look at the stock market? Did I even think about it? No. The first thing I did was look over what the 10-year yield is doing. It's 3.31 as I am doing this video blog. People, how can I say this another way? If we continue to see that 10-year yield jump, bang, 9 basis points, 10 basis points, 20 basis, whatever it might be higher, keeping in mind that global bond yields are rising, it's just over. It's over. The liquidity issue is going to get much, much worse. And look, as I have said, it's early. I haven't had my second cup of coffee yet. If central banks don't get in here and start buying more, everything is going to change. The entire financial system from stem to stern is going to melt down. And I'm going to tell you yet again, if you do not have some cash on hand, literally in hand, I'm not saying in the bank or access to an ATM machine or whatever it might be. No, you need to have it in your hand. Go to the bank, take some cash out. Okay. You always have to have the high ground. I know every time I tell people to be prepared for something, I get the detractors. Oh, Greg's making a big deal of nothing. Oh, these are the imbeciles. I don't know what these people are. Look here. You always have to be prepared. There's nothing wrong with being prepared for what's coming. We are going to get a credit freeze. Liquidity is drying up. I don't know another way to say it. I've been repeating myself over and over and over again for weeks now. Anyway, let's look over at the market. Like I said, so 10-year yield, 3.31, the most inverted yield curve you've ever seen in history. You got Bitcoin now under pressure along with other cryptos. Bitcoin under 19,000. Gold and silver aren't doing too much of anything right now. You got crude oil about flat as well and a stronger dollar. Imagine my shock here. I'm telling you, I've been explaining. We have discussed right here in this blog about the Dixie, the whole issue with the strength of the dollar. The strength we're seeing, the relative strength, in other words, the comparative strength of the dollar, in my view, is going higher. Again, the US dollar is seen as a safe bet, a safe place to be. So you're getting this sell-off here in the debt market, a stock market which is reflecting that by all these gyrations here, pressure on the stock market, and it's people are hoarding dollars. It's a very simple concept to understand. Now, one of two things are going to happen. Either central banks are going to get in here and start buying more which will stabilize the debt market. Look, at this point, your guess is as good as mine or better. I've been saying that I believe central banks are going to do more. It doesn't look like they are right now. Maybe we're really at that moment where they're going to let it go. I don't know. But I'm watching not just the 10-year yield, but the MMRI. The MMRI hit an all-time record high yesterday. An all-time record high. And it continues to go higher. Again, start paying attention to the MMRI if you don't already. Link in the description of this video. Free to everybody. It's free for everybody. It helps you keep track of risk in the credit market. That's really what the MMRI does. It looks at the credit market or the debt market using the dollar as a unit of debt as well, and comes up with a neat little equation. It's color-coded. It tells you what's going on. I think it's great. I love the MMRI, and I created it. It's my little monster. I'm like a Dr. Frankenstein. Something definitely wrong with me. All right, people, look, you know where we stand. You know where we're at. I want to hear from you. What do you think about this? So what surprises you? Are you surprised that more corporations are talking about laying people off and cutting investment? Are you surprised that mortgage demand continues to fall off a cliff? Are you surprised even more so? I was writing all this stuff down this morning. That inflation continues to rise and we haven't peaked yet? Does that surprise you? Are you surprised that Morgan Stanley is warning that there's trouble in the credit market, which could lead to a stock market free fall? I don't think you're surprised on that one. And I don't think you're surprised about Goldman Sachs warning of a severe downturn in the housing market. But if you are surprised, I want to hear from you, okay? I want to hear from you specifically. All right, look, this guy here loves you a lot, and I mean that from the heart. Please share this stuff. Please get it out there. Please comment. And I will see you at the end of the day. Promise.